All right, hello, good morning, good evening, and good night. Holy smokes, if you look at the top of my screen, we have so many tabs open today, and that's because we are going to be talking about 5 different buy and hold stocks forever. And I know you guys are not super keen on the low dividends. You guys like the high dividends, the Teslas, the USOI, and the clip. But the thing is, what do we do once we have awesome income from these companies? For example, if you're making $700 a year, $300 a year, and you want to put that into well-diversified or companies that are going to last forever and pay you those dividends till the end of time, that is what we're going to be talking about in this video. And imagine in Tesla or Clip, you have $50,000 and you're receiving, for example, a 66% yield on cost. Now, with that yield on cost, you're going to be receiving times 0.66 equals to $33,000 every single year divided by 12. You're going to be receiving $2,750 that you could then invest into these 5 amazing different companies and industries. And so what I'm going to do in this video is we are going to take this $2,750 and we are going to split it into PepsiCo, Costco, Realty Income, Broadcom, and the Schwab U.S. Dividend ETF, SCHD. And what we're going to do is we're just going to go through each one, and I'm going to show you guys why these are amazing long-term holdings for the future. If that does sound good, please do stick around to the end of this video. We passed the 1,815 subscriber mark, and I know I didn't make a video for the last 1 day and 17 hours, so basically 2 days. I just wanted to take a day off, see how the YouTube channel would hold up, and it held up fantastic. So I'm super happy. Awesome. I can't complain with anything. You guys are so amazing, and you guys comment and like so much, so thank you for that. So if you could stick around with me, I know this is not your traditional honorable investing video. We're going to be talking about some lower dividends, but let's get into the video nonetheless. So today, the first one on the list is we have SCHD. And you know what? I could go through all the financials and everything. It pays a 3.4% yield. Boo on that one. That one's not too good. A $50 billion market cap, and it's got a very low expense ratio of 0.06%. So for every $10,000 invested, you're only getting about, what is that, $60? Let's see here, $10,000 times 0.06. Oh, I did it. Wait, hold on. 0.6. Only about $60 is being taken away from your $10,000. So that is not bad at all. And I'm deleting that because we're talking about SCHD, which is, for example, the objective of the fund is the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. 100 index, which I really like the Dow Jones. I use the Dow Jones as my metric for everything. It is the largest 100 companies, or what is it, 100 or 500 companies in the stock market, or is that the S&P 500? I'm not 100% sure, but as you can see, they hold amazing stocks: AMGN, AbbVie, Home Depot, Cisco Systems, Broadcom. Broadcom's actually going to be in our video. So this is a very diversified fund. If you're looking for a simple 3.5% return and potentially, a gainer over the long term, all these stocks, if you look at them, their price charts are gaining in the future, from the past to the future. So these could be long-term holdings that will appreciate and provide you those dividend yields. So that is SCHD down. We're now talking about PepsiCo. And PepsiCo is an amazing business. Look at this, guys. They have so many different products on your left, going from 7-Up, Quaker, they own Lipton, Lay's. Amazing. This is, I could have said Coca-Cola for this, but I decided to go with PepsiCo. It's a $250 billion market cap, a 2.63% dividend. I could go through the financials for all these companies, but they're all pretty sound, and that is because they are all giants. PepsiCo, for example, owns 500 different brands, going from Doritos, Gatorade, Mountain Dew, Walkers, Quaker, and so many more. I'm just even going to jump around here. You see Tostitos, Fritos, Cheetos. They all rhyme too, so that is a great sign. But you can see PepsiCo is an absolute giant, and for a 2.63% dividend, I know the dividends aren't that great, guys, but if you could stick with me here, look at this price appreciation over the long term. That is fantastic. And you know what? You could pretty much feel safe putting your money into Schwab, PepsiCo, Costco almost at any time. Sure, you guys might want to buy at certain opportunities. Let's say a little downturn here like we had in 2009. But for the most part, these are stocks that you could buy for pretty much any time or average into at any time, and you'll most likely do well. Now, Costco, I know you guys are dividend investors. What the heck is this dividend? 0.73%. Costco's price just keeps appreciating so much, even over the past 5 years, up over 100%, that the dividend just simply cannot keep up. But as I said, their financials are definitely really amazing. They are, once again, a $250 billion market cap company. And, you guys know what Costco does. Costco sells everything. They sell it in bulk, and they charge people a membership in order to use their store. The membership alone probably doesn't brings in them a decent amount of money, but they also have other amazing things under them. As I seen here, this Kirkland brand, this is Costco's main brand, and they just generate so much money from selling things in bulk. And everyone goes to Costco. Every single time I go to Costco, it's always busy. Comment down below if you go to Costco and it's busy, man. I know you can relate to me. It's an amazing store. You can find anything and everything there, and in amazing quantities for your family. So that is another stock on my list. That is a third. Now jumping to the fourth, we have Realty Income, ticker symbol O. Now, I wasn't actually a huge fan of Realty Income in the past, just because I look at this earnings per share of 1.42, and I look at this forward dividend of 3.07. And I'm like, sure, it pays 5%, but is that safe? Because you're paying out more than double in that dividend. But you know what? It is actually a decently safe stock. When I look at their income statement, you want to see it growing every single year. Their net income is growing every single year, which we love to see. We also have on their balance sheet, for example, we want to see that growing every single year, which it does, and it's been growing pretty drastically over the past few years. I wonder if they've been really loading up because of COVID. And just going into their statement of cash flow here super quickly, you can see their funds from operations also growing. So this is a pretty stable company. It's growing, it's producing, they're reinvesting, and they're paying down their debt, which is awesome to see. And you know what? Just even jumping to what they do, they are in oh my god, it's still the morning, look at me. They are in so many different industries. So we got obviously they're in the real estate industry, but they invest in so many different places, such as convenience stores, grocery stores, dollar stores, Home Depots, drugstores. They have a very diversified client base. And even I actually go to LA Fitness, so I'm if I invest in Realty Income, I'm investing in something that I use. And they also have Walmart here. And if you like Lowe's, or for example, FedEx, if you ship any packages, they own so many different places and rent them out to their clients. Such a diverse base that, I could see them staying around for the future. And that's why I wanted to recommend Realty Income to you guys. Not saying that you got to buy it, but I'm just recommending it, or I'm just showing it to you. Now we have Broadcom. This is our fifth and final stock, AVGO. And this one needs no introduction. This is a $342 billion market cap company. And they're in the semiconductor space. They have a bunch of different products, such as, the Broadcom Wi-Fi solutions, data centers, financial solutions. They're in a ton of different industries, and they basically, they're a technology company. I'm not super diverse on what they do exactly, but all I know is they're a massive company, and they're in so many different spaces and provide so many different products and solutions in terms of technology. As you can see, it looks like they almost provide the power for robots and all those kind of robotic things. But as you can see, they earn $31, basically $32 per share, pay out half of that in the dividend at 2.18%. The stock price is definitely high, on the higher side. But this is a company that has grown for years and years and years, starting out from literally $20 and having a share price of $830. And you know what? With all these companies, you see that the dividend hasn't kept up to their price, and that's why it's so low, because they grow and appreciate so fast. So that's why I wanted to show you guys these 5 dividend stocks that you can buy and hold for pretty much ever, for the future. So with that Tesla income, with that dividend income that we are talking about on this channel, I hope you guys can, put some of that into some safer stocks eventually when you guys want to settle down, or just take all your yields and put them in a bit lower yielding companies that will pay you for the future and hopefully for the rest of your life. So, with that being said, I hope you guys did enjoy this video. I hope you guys learned a little bit about each stock, being SCHD, PepsiCo, Costco, Realty Income, and then Broadcom. I hope you guys did enjoy this video.